Hello everyone, George DeSantis here with a look at the market for the week ending Friday, January 18th, 2019. And let me bring up the disclaimer as we usually do. So please read it. It instructs you that I'm not a professional investment advisor and I'm doing this mostly for my own benefit and make it a YouTube video so that if others want to look at it, they can. But I couldn't possibly give anyone investment advice for a whole lot of reasons. So make your own decisions. So let's start today by looking at a chart, a monthly chart of the S&P 500. I don't usually look at it every week because it's such a slow moving chart. And as our friend Alex Elder says, I can't really trade the monthly chart either on the index or individual stocks. So we start usually with the weeklies, but let's take a look at the monthly chart here. Luis Yamato was pointing out that we have conflicting signals. When we look at the monthly chart, it seems as though, well, we're still in this very bearish looking chart. And when we look at the weekly and daily charts, though, we see a lot more bullishness. Well, here's something that she didn't discuss that I think can be significant in terms of this whole discussion. First of all, this pattern here, this candlestick pattern, is something that is called a piercing candlestick pattern. There's a very bearish candle here. We found support at the 50-month moving average. And then we gapped down this month in January, we gapped down. Okay. Now, so far for the month, we are closing above the mid-range of this bar. And that's a bullish piercing pattern. So I'm not so sure that the bullish chart is so negative. We'll take a look at the weekly and the daily charts. Let's look at the other indicators. Down here we find, yes, the MACD is still trending down, the histogram anyway. Williams percentile, though, just ticked up so far this month and stays above the 50% line, which I think is significant. But even more significant is the RSI 12. RSI 12 remains above 40%. It's now at 43. And usually that is very significant in terms of the trend. We also have the sum of the rate of change indicator above 4%. So I'm not so sure that this monthly chart is so bearish after all. Just my comment on it. Now we turn to the weekly chart of the S&P 500. You can see here that after pulling back in this area, we pull back to the 200-day moving average, well, 200 week in this case. We continue to trend up. And last week, when I did this on the weekend, last weekend, I pointed out that we were bumping up, this bar here was bumping up against the resistance of 2600, support resistance line, this yellow line. Last week then, we breached that, we've closed above it. And now we're looking to bump up against the 2700 2700 on the S&P 500. And at that level, we have the 50-day moving average, or in this case, 50-week. And we also have this 30-day period moving average. So 2700 is now within close range. We're now at 2670. That's a pretty nice move last week. And if we look at MACD, we find that we are trending up. We continue to trend up, which is nice. Which, if you read Alex Elder's books, he says one of the best times to be buying an index or stock is when MACD histogram is trending up from below the zero line. Looking at Williams percentile, it just ticked above the 50% line. It seemed to be breaking above the 50% line. And this is confusing here. It says minus 45, but notice the numbers are inverse here. 0 is on the top here and minus 100 is here. So anyway, when we go down to the next indicator, that is the sum of Jerry Appel's sum of the rate of change indicator, you can see that indicator is continuing to trend up. And RSI 12 on the weekly chart, a very powerful indicator for the trend, is now above that 40% line. So I think 2700 is within range, and it looks as though we're going to get there. Uh, unless we have some major catastrophic event, things that we cannot anticipate, the black swans. Now let's look at the daily chart. On the daily chart of the S&P, you can see here that we've broken above certain resistance levels. Like this magenta line is the 50-day moving average, and the 4 EMA just crossed above it. 4 exponential moving average just crossed above it on Friday particularly, but on Thursday as well. So now the 4 continues to remain above the 9 above 30. Classic uptrend, baby. Classic uptrend. MACD histogram remains above the 0 line. Williams percent R is trending up. Not only is it above 50%, but it's trending up. And some of the rate of change indicator, likewise, above the 4% line. And RSI 12 is above the 60% line. So we have a nice looking uptrend on the daily chart, on the weekly chart, and on the monthly chart, where we may have seen conflicting indications there. We do have that piercing candle. So this thing is likely to continue in an uptrend. So let's turn to some other charts on the S&P. Now here's that chart, the high-low index, the new high, new low index, which we've looked at before. Remember, Alex Elder sent us an email saying, hey folks, we spiked down here, and when we get past that 4,000 level, look out, trend is going to be powerful, and that's exactly what we're seeing here now. Another chart we looked at before is the impulse indicator, which is the coloring of the bars, red, green, or blue, and it's a censoring system, as Alex calls it. Because the bars are green, we are not allowed to go short. It censors us. We're not allowed to go short. We can only go long or stand back, stand aside. Now we have the bars closing above the 50-day, I think it is the 50-day average, and above the 9 and the 32. And so this is looking pretty strong to me too, the trend, you can see here Williams percent are trending up, and it's now above that 20% line. Here's McClellan's oscillator, and it's been bullish since we made this low here around December 24th. It's been trending up. So let's look at some individual stocks. A few of these I own, and some of them I don't own, but they still look pretty good. So I'm going to give you, what I'm going to do is type up a list and send them to you by the email that I usually send out. In any case, this is Etsy. I own this one. I have quite a few shares, and you can see that it's trending up nicely. The 4 is above the 9, 9 above 30. And Etsy is one of those stocks that the Shaken Analytics folks rate pretty highly. It's neutral in terms of its power gauge rating, but the relative strength is positive. It's a little overbought, but the money flow is still positive. And the trend is strong and the industry is strong. It's also above the 200-day average. So I'm going to send you a list of a spreadsheet of this data that I just quoted you, so we can make this more abbreviated. Let's look at another one. Another one they have, in which I own, is Salesforce, and you can see that's a nice looking uptrend. For January, it went all the way from about 140 to 152. So that 4 is above 9, 9 above 30, above 50, etc. So this is a nice looking uptrend. Another one is Workday, which you know I love, but I don't own it right now. It hit the upper Bollinger Band, and you can see had this pullback a little bit here, but this thing is still looking very strong. All the other indicators are strong. I don't like that word, strong. Somebody else uses strong a lot, and I just don't like it. MACD is positive. And these other indicators are in positive territory as well. Here's a daily chart of Viva Systems software, health information systems, and this is a nice, beautiful looking chart, and nice uptrend. How long will these trends continue? Good question. We really don't know, and that's why we have to have sell criteria. If the thing starts pulling back, although sometimes it'll pull back so much, like Tesla did on, was it Thursday or Friday? Thursday, I believe it was, that, we have no choice. We have to sell. So anyway, this is a nice looking uptrend. You can see all these other indicators looking good. Another stock is PayPal. I own this one. It went pretty close to the upper Bollinger Band and then pursued a trading range here. But the other indicators here are looking pretty good. MACD trending down a little bit, but that's not very significant. The next one on that Shaken Analytics list, which I own, is Adobe. And you can see the trend looks very nice. It's just closing above the 200-day average here, this white line. And I own this one. And you can see these other indicators are looking pretty good. And here's a new one for me anyway. Innoviva Incorporated, biotech. And you can see that it's on the shaken list. And you can see that it trended up nicely here against the Bollinger Band. But then, of course, when it hits the upper Bollinger Band, we tend to go into a trading range. And now it seems to be trending up a little bit again. But it's on that list of stocks. And IBD rates it pretty highly as well. Another one is AYX, a software company, Alteryx. And you can see the trend looks very nice, 4 above 9. I don't own this one, and I don't own Invivia anyway. But you can see I'm just pointing out the ones that I just did some research on. Here's a company that I don't own it, but I came across it for a number of reasons. It pays a nice 6.38% dividend, and it's in the oil and gas midstream area of production. So it rallied up, it hit the upper Bollinger Band, went into that trading range, and then it seems to be rallying again. If you like something with a nice dividend like 6.38%, here's something that you can look at. Trend is looking good. Here's another one. It's a software application. It's called RingCentral, RNG, and you can see a nice looking uptrend. Again, all of these are on the shaken list that I made up. I will type it up and send it to you with the email. RSI 12, all of these indications here are looking good, right? And here's another one that I don't own, but it's on that shaken list that I'm going to keep track on. And you can see a nice uptrend. Wish we bought it here, right? All these indicators are looking pretty positive here. MACD still bullish, and it's Internet Content Information, CRCM. Here's Netflix. As you know, I sent you an email saying that I did sell it before we got this big drop here. I sold it the day before earnings. I had a very nice gain, very big gain, and I didn't want to run the risk of going into earnings owning it. So, because as I said, it could go up another 50 or it could come down another $50. Why take the risk? So I sold it. But I tell you what I did. I bought some calls. The 360 calls going out to March 15. So we'll see how that works out. Of course, I should mention Tesla because I liked it all the way here. It looked pretty good. And then boom, bzzz, I got zapped because Musk decided to lay off 7% of his staff. So anyway, I sold it here. I sold it because it dropped. 4 broke below 9, and it dropped more than 6%. Get out. No questions asked. So you do have losers, Can't win them all. Folks, I think we are at the end of the 15-minute period, so I'm going to say I hope you have a good weekend. Enjoy the football. I'm going to take a look now, and we'll try and do this again next week.